Dogecoin to me has no institutional sponsorship. It has
Zero.
nothing associated with what I'm doing. And that's why me not looking at it's important. The reason I started looking at it is technically it looks close to a breakout. At the same time, Bitcoin up near the 200-day moving average looks like a breakout. Ethereum around 2400 to 2450 to me would look like a breakout. But Dogecoin to me, if it can break out and actually run, that would mean that retail is starting to get interested.
There's a reason experienced macro investors suddenly start paying attention to assets they normally ignore. And right now, Jordi Visser is doing exactly that with Dogecoin. Over the past couple of months, most institutional conversations around crypto have centered almost entirely on Bitcoin, Ethereum, tokenization, stablecoins, and infrastructure plays. Dogecoin was often treated as a meme, a retail-driven sideshow with no serious institutional sponsorship behind it. But now, Jordi Visser is openly saying that Dogecoin may be one of the most important signals in the entire market. According to Visser, Dogecoin breaking out would signal something bigger than just another altcoin rally. It would mean retail investors are finally coming back into crypto. And historically, whenever retail enthusiasm returns to the market, the entire landscape changes. Bitcoin starts accelerating, Ethereum gains momentum, speculative capital floods into smaller assets, and the market enters the kind of euphoric phase that defines full-blown crypto bull cycles. What makes this even more interesting is the broader macro backdrop surrounding his comments. Visser believes crypto is entering a period similar to what happened with AI stocks and semiconductor companies over the last few years. Institutional investors initially ignored the move, then suddenly found themselves chasing assets that had already gone up multiples higher. In his view, tokenization, regulatory clarity, network effects, and worsening monetary debasement are creating the exact same setup for crypto right now. And if Bitcoin decisively breaks key levels while Dogecoin starts running, it could become the confirmation that the next stage of this market has officially begun. So in today's video, we're going to break down Jordi Visser's shocking Dogecoin prediction, why he believes crypto is approaching a major breakout moment, the massive Bitcoin development connected to the Strait of Hormuz, and a super bullish macro prediction from Raoul.Pal that could completely reshape expectations for the market. Make sure to like the video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
I love data, but the data I love the most is the data that I can attach a signal to. Here's my overall belief, and I said this on stage this week. We talked about Micron technology last year. Phil Rosen, your guy, reposted something very nicely about me and said that in my stock selection for his piece last year for the best stocks for 2025, mine was Micron. And I did that when it was 86. I mentioned last week that I sold out of 2/3 of my Micron. Well, I got rid of the last third this week because... Ooh. But here's the thing. It has nothing to do with my belief in AI and my belief that Micron's going higher. I do believe it's going higher. And as I said last week, at 6:30, when I made the 2/3 sell, did I think it was going to double from there over the next year? No. At 8 something, I was like, well, now I'm not looking at this anymore. It had already gone up 8 times from where it was a year and change ago. If you're lucky to get an 8-bagger in crypto, you're happy. Well, this was in a public stock. So to me, it was like, go find something else. Now, what I told these people on stage was, because of what I believe with tokenization, because of what I believe is happening with the network effects, the fact that yesterday the Clarity Act probability skyrocketed up to 73% before the end of the year. I believe we are in a very important point in crypto where a year from now, the same problem that these institutional investors are having with semiconductors, which is how do we buy something that's gone up 8 times from where it was, even though the earnings are good, I can't do this even if it's cheap. Crypto is going to move away fast at some point too. And Micron stayed below, and everyone can go look at this. It stayed below 110 repeatedly for the entire first part of last year in the same way that crypto has. It didn't have the energy to push through, and I couldn't figure it out because as someone who was absorbed with AI, I knew we weren't going to have enough memory. That was clear. I didn't think it would get to the situation it did with inference, but that first move from 100 to 250, that's absolutely what I thought, and that's what I wrote about. I thought it would double. Well, when inference came out and I realized how much more memory is needed, that changed the equation. I think a year from now, people will be looking at crypto in the same way. They're not paying attention to it right now because it's not moving. So this is where Dogecoin fits in. Dogecoin to me has no institutional sponsorship. It has
Zero.
Nothing associated with what I'm doing. And that's why me not looking at it's important. The reason I started looking at it is technically it looks close to a breakout. At the same time, Bitcoin up near the 200-day moving average looks like a breakout. Ethereum around 2,400 to 2,450 to me would look like a breakout. But Dogecoin to me, if it can break out and actually run, that would mean that retail is starting to get interested. We talked about how retail was focused on AI. Well, guess what? If I'm right about memory, that whole DRAM thing right now, it's done. It's not that it won't be back in a year or maybe 2 years, but it's already had a huge run. Micron has outperformed every Mag 7 dramatically since 2018. Dramatically. Forget the last year. Dramatically. So I think we're at a point where you have to watch things like Dogecoin. You have to watch things like Bitcoin. If Bitcoin gets above that 82,000 level, it will have broken the 200-day moving average. And I'll end it on this. I said the most important thing was the regime shift. This week, we have negative real yields. And I think they're only going to get worse. And I don't think the Fed is going to move rates. And I think earnings in the S&P are still going to be good, which means there will be a floor to the stock market. Even if we get a sell-off, you want to be in a position to buy things because I think they're going to have to do something in rates. And that's why rates moving higher is actually the best thing for gold, for silver, for copper, and for Bitcoin, because the government will have to push rates back down. And that's going to take some kind of debasement move that they're going to have to do to keep these under control. And I think that's a positive.
Jordi Visser's broader point here is that markets are starting to transition into an entirely different phase, one where investors can no longer rely on the old assumptions that dominated the last decade. His argument isn't simply that crypto prices are going higher overnight, it's that the underlying conditions are slowly forcing investors towards scarce assets and alternative monetary networks. And historically, moments like these have eventually pushed liquidity into assets that benefit from monetary debasement, especially Bitcoin. What makes this discussion even more important right now is the timing of recent global developments. We've now seen reports that Iran has launched Hormuz Safe, a maritime insurance platform tied to shipping operations through the Strait of Hormuz, with Bitcoin reportedly being used for settlement payments. If true, that represents another real-world example of Bitcoin increasingly being integrated into global financial infrastructure outside the traditional Western banking system. The text on the website reads, "Secure digital insurance for maritime cargo." Hormuz Safe provides Iranian shipping companies and cargo owners with fast, verifiable digital insurance paid via Bitcoin and settled at the speed of the blockchain. At the same time, markets are debating the beginning of Kevin Warsh's expected tenure as Fed chair, with major disagreements over whether the Federal Reserve will eventually cut rates aggressively or remain restrictive to fight inflation. That uncertainty is exactly where Jordi Visser's warning becomes relevant, because his outlook suggests the economy may weaken enough to force policymakers back into liquidity support measures, even as inflation pressures remain elevated.
Well, first of all, Scott Besson is talking his book, obviously. This is a major bet that they've made. The midterms are coming up. So they want this to go down. But when you start a conflict, and you've got a chokehold place like the Strait of Hormuz, you don't get to choose when it ends. That is a negotiation, and anyone who's been in any kind of negotiation, there's two sides to a negotiation, and making oil go back down is not something that they have complete control over. On the second point, see, this is the problem with inflation. This is why, I spoke out against trueflation. I spoke out against it. Your view on inflation and what's gone down, we just saw a CPI coming at 0.6. Last month was 0.9. It's down. That doesn't matter. What matters is, where is headline inflation relative to what people expected? People did not expect inflation to go higher in the market. You cannot buy stocks at without any risk and believe that if inflation goes higher and rates go higher, that it's not going to have an impact on the market. That's just not true. If inflation does go higher than expected, and that's what's starting to happen, we not only have the CPI this week, we had PPI, which surprised on the upside. But most importantly, we had the import price inflation, which was really the leading part of this. This started before the war. A lot of the inflation data started before the war. So I live in a world of facts. I don't live in jawboning and, back testing models to look at things. I'm listening to investors and I'm going through what the surprise would be, and I'm looking at the charts. The rates charts are kind of scary. Part of the reason that I said we're going into a regime shift is because we now have 3-month bills sitting at 369, and year-over-year inflation currently is 3.8. That number is going higher. And even if we get a 0.5 number next month in the month-over-month number, if we keep putting in 0.5s over the course of 12 months get you above 6%. And that's year over year. So you have to be careful with inflation about, A, what they're saying, and secondly, what's going to happen. There was a Supreme Court ruling yesterday on the trucking industry. I'm going to go through this over the weekend. This is really important because this is something that had started in the courts with the Biden administration. And you had a unanimous decision in the courts. When's the last time we had a unanimous decision in the Supreme Court? And this was about effectively trucking companies, the brokers, needing to make sure that who they're directing business to, that they're liable for if people don't have insurance or if people. So it really kind of gets into the underground market of trucking, which is going to limit capacity. The reason I'm bringing this up is we have diesel prices through the roof. Now you're going to have less capacity in trucks. This country runs on the trucking side, and rates are already going higher. This is why anyone arguing that inflation is not going higher, I just don't find it credible that you can ignore semiconductors, you can ignore memory prices, CPUs, bottlenecks in transformers, gas turbines. We have a bottleneck supply shortage situation, which is coming because the administration decided last year they wanted to run this thing hot. This is all part of debasement. If we have inflation running higher, that means nominal GDP runs higher than interest rates. Well, that's how you get out of a debt problem. That's one of the ways that you do it. And I think that's the attempt. The issue is going to be now that rates are pushing higher, we start to worry about the debt again because interest expense is now $1.2 trillion a year. On the expense side, even with rates at these levels, they're not in a position to be able to raise rates. And even if they were, how much are they going to raise them? Is that going to stop inflation? No, because I do agree it's transitory, just like the last one was transitory. The question is, how long is transitory? And if we go another 6 months of year-over-year CPI going higher, I think in that environment, the market's going to have trouble. It's going to be pressing on the rate situation. And just remember, the worst of last year, post-Liberation Day, was when we had stocks, bonds, and the dollar going down. I think people have to start worrying that maybe, again, we haven't had a correction now again since we've had this massive rally. I think for semiconductors, we're going to start to see some issues pop up where we're going to have some profit taking. And then on the flip side, I just think we're going to be dealing with inflation for longer than people think.
This is ultimately where the crypto story becomes incredibly important over the next several quarters. Jordi Visser is essentially arguing that the system is approaching a point where policymakers are trapped. Inflation remains sticky, debt interest expenses continue rising, economic growth is slowing beneath the surface, and markets are becoming increasingly dependent on liquidity injections to maintain stability. That creates a dangerous balancing act for central banks and governments. But historically, whenever policymakers choose liquidity over austerity, scarce assets tend to benefit the most. That's why Visser keeps connecting Bitcoin, Dogecoin, gold, and other hard assets to the same macro narrative. If rates stay too high for too long, economic stress increases. But if policymakers eventually step in with cuts, stimulus, or some form of monetary debasement to stabilize the system, liquidity floods back into markets. In that environment, Bitcoin becomes increasingly attractive not just as a speculative asset, but as an alternative monetary network operating outside traditional financial constraints. Interestingly, this outlook shares major similarities with what Raoul.Pal recently posted on X. Pal wrote, "You think rates are going to blow up the economy, Anon? You underestimate the difference it is having a macro hedge fund manager running the treasury. He knows the game, the stakes, and he knows the dials. No one is going to sacrifice the midterms if they can absolutely avoid it, and they will do everything possible to win them. Relax. It'll all be fine. Better than fine, in fact. The liquidity spice is flowing. Everything else will be dealt with." That perspective lines up almost perfectly with Jordi's broader thesis. Short-term volatility and economic stress may force policymakers into action, but the eventual response could become massively bullish for liquidity-sensitive assets, including crypto. Now, whether you agree with Jordi Visser or not, one thing is becoming increasingly difficult to ignore. Bitcoin is no longer operating in isolation. It's now being discussed alongside sovereign debt problems, global trade systems, inflation policy, shipping infrastructure, and monetary debasement. That's a completely different conversation from previous cycles. And if Visser is right that retail interest is beginning to return just as macro conditions become more favorable for alternative assets, then the next phase of this market could end up surprising a lot of people. If you enjoyed this video, make sure to like, subscribe, and share it with someone who's following the crypto market closely. Thanks for watching, and we'll see you in the next one.